The Reserve Bank of India has announced a one-time restructuring scheme for certain small borrowers. The regulator has allowed banks and non-banks to restructure loans up to 25 crore without any downgrade of the asset classification. But the scheme is applicable only for loans that were in default but still classified as standard on the 1st of January 2019. This is effectively a return to the days of regulatory forbearance. Joining us to talk about this is Mr. V.G. Kannan, Chief Executive Officer at the IBA, and Anil Gupta, Vice President at ICRA. Thank you both so much for taking the time to speak to us. What is your sense of the quantum of loans that could fall under this bucket? Because it's a very small window, accounts which were in default but standard as of 1st January.
Yeah, hi, good afternoon. As per the data which we have for the MSMEs less than 25 crores, I'm not taking the individual exposure, but to entities that will be around 12 lakh crores, which will be broadly around 2 lakh crores from NBFC and 10 lakh crores from the banking system. Now, if we look at the disclosures which were given by the banks in their quarterly results as to how many accounts have taken the forbearance, because this dispensation was given by RBI first in the month of January or February 2018, and subsequently it was extended to non-GST registered MSMEs also in the month of June 2018, provided they register themselves under GST by December 2018. Now, as per the June circular, the forbearance was to be taken away like in a gradual phased manner till May of 2019, and because of which I think the incentives for the borrowers was not very, you can say very high, because finally whatever is the overdue you have to clear by the end of May 2019. Now, if we take the total data which is under forbearance, it will be less than 10,000 crores as on September 2018. But now with this getting extended like till March 2020, and all the borrowers can avail this restructuring which are registered under GST. So I am like slightly concerned that the borrowers which may be overdue by 30 days or 60 days will be tempted to take this dispensation, opt for a restructuring with a longer repayment schedule, and overall the size of the restructured loans can hence exceed more than 10,000 crores.
Okay. Mr. Kannan's back with us. Mr. Kannan, sorry, we lost your audio there, sir. You were making a point on why you think there may be some justification in allowing this dispensation for small industries. And also, if I can ask you whether the industry has an estimate on what quantum of loans could come under restructuring now that this has been provided.
I'm sorry, on the figure point, I'm not in a position to say. But rest assured, I think a large number of small accounts will come into the ambit. What I actually wanted to say, and countering what Mr. the other person is speaking, is hitherto, since the account is to be downgraded the moment the account slips into NPA and is restructured, there was no attempt at all for restructuring at all. With the result, the company either repay the loan or get tracked as an NPA, in which case he loses any option of any funding. And very often we have seen in the past, restructuring has been a way to ensure that a temporary relief is given, maybe over a period of 2 years or 3 years, which could actually enable it to come out of certain situations. Many accounts slip into default and back mainly because a lot of cash flows are not coming as they had planned. And in case there's a delay is continuing over beyond 90 days, the account will become NPA. But if there could be a restructuring, this could help some of the small borrowers to come out of it. This is a major positive step. In fact, IBA had recommended it post the discussion of the governor with the bankers, and they have made a reference to the meeting of the board that such a dispensation should be given at least to the small borrowers who should not be penalized, mainly because there is a small delay. And the banks were averse to any restructuring, mainly because it is being classified as NPA. This could be a positive. However, they have also given a benefit, some sort of direction that additional 5% provisioning will be made. Therefore, effectively, there will be a slightly higher provisioning than standard. This should go a long way to ensuring that many of the small borrowers are benefited.
Okay, Mr. Kannan, I'll stay with you for one more question. Do you think bankers will jump to restructure these accounts? I asked from a risk-reward perspective, because when forbearance was provided for corporate loans, you had large accounts. So obviously bankers wanted to go restructure them because it would, help them keep their NPA numbers in check. Here we are talking about a large number of small accounts. So the risk-reward to restructure some of these SME accounts, does it work for banks? Will they do this actively?
In fact, in the case of smaller accounts, the possibility of turnover is much better than some of the larger ones. Larger ones have got so many imponderables, and I think that there could be issues. I think the smaller ones are much easier to do a proper restructuring. It could simply mean either some additional funding or stretching the payment by a couple of years. Whereas in the case of large funding where PPOs are not in place, FSAs are not in place, I think restructuring is a different ball game. I feel that restructuring these small units, which have been there since the 80s, since I've been working in the bank, I think can be successful.
All right, Mr. Kannan, thank you for joining us on that. Anil, I'm going to come back to you. Again, a little surprised at the timing of this, because if you look at the data that is there for SME, NPAs, whether you look at the CIBIL data or you look at the data which the RBI had referenced in its recent reports as well, it's not like we've seen a spike in sort of stress in the MSME sector. So why is this being done to your mind?
So I think there has been already some sort of assets which are under forbearance, right? So this forbearance has been continuing for almost last 12 months, and the timeline for this was 31st December. If you don't provide a solution now, for those accounts which are under forbearance, so those accounts have to correct themselves in next 5-month period, right? So first of all, you will pressurize the repayment, because now apart from your scheduled repayments, you have to also repay the overdue installments which you have not paid during last 1 year in period of next 5 months. So one is that. Second thing is the NPA levels, though yes, you are right, it may not have spiked up, but in absolute terms they are quite high. And for public sector banks it is around 15-16%, at a system level it is at around 10%. So it is quite a high number, and if some of the fresh accounts can be prevented into slipping by easing out their repayment pressure, I think that has been the thought process to provide some relief in the backdrop of rising interest rates, the slowdown in the small and medium enterprises sector because of the GST and the demon issue. So it's more about, I think, the looking at that we as a regulator, something is being done for the sector rather than maybe the numbers which don't indicate too much of a stress.
Anil, just a last word on this. From your interactions with banks over the years, typically what form does this kind of restructuring take for smaller companies? Does it essentially just extend the loan repayment term, the period over which the loan has to be repaid, or usually is there a restructuring on the interest rates, etc. as well?
So it can involve all these things. One, if let's say residual tenor is 3 years, the restructuring can involve extending the tenor first. Second thing is, if there is an issue in terms of cash flow for servicing the interest also during the interim period for, let's say, next 6 to 8 months, interest is also funded by way of a funded interest term loan, so that there is no cash outflow for interest servicing till the time the restructuring is implemented. And it can also entail fresh loan sanctions for meeting maybe the cash flow gaps required for completion of certain project or certain asset which is not fully in a position to generate cash flow. So additional working capital limits or term loans can also be sanctioned as a part of such restructuring arrangements.
All right.
But the precedence shows that a large portion of the restructured accounts have fell into NPA when the flexibility was given for large corporates. So we just expect that this restructuring window will not be used for evergreening of the accounts which are really under stress.